So at first glance, this looks like a standard crypto consolidation. But as we dig into the structure, the timing and the magnitude of the move, a very different story is going to come through. And I want to start by saying that I am here to educate you. Now, the Black Swan channel is here for you. It's here for you to understand what is going on in the market. And more importantly, right now, it's here for you to understand what's going on with Bitcoin. What we're seeing on this chart is a Bitcoin price comfortably around 90 to 92,000 for several days heading into late November. So this region has become kind of a, what we call a stability band. Not a flat line, but a healthy sideways, typical of a market waiting for a catalyst. So basically, the market doesn't know what it's doing. It's kind of moving back and forth. And so what's going on with Bitcoin? For almost 48 hours, right? Bitcoin traded in a narrowing range with just a brief spike above 92,000, likely driven by short-term liquidation, automated trading strategies, or maybe some leverage long interest. But that spike failed, and that is what you need to understand. And if you look at it, right, and failure at the top of a consolidation zone is often the mark of a first warning signal. What do I mean by that? Well, after the attempt to break above the 92,000, the price quickly sent back into the same band. This isn't dramatic. Bitcoin is known for false breakouts. But however, what is important is a character of the pullback. The recovery attempts became weaker. The highs started to step down. The low crept closer to the bottom of the 90,000. This is a classic what we call a distribution behavior, where large holders may be offloading gradually while the public believes prices are stable, which is always the case. And this is what I created this channel. I want them to stop taking advantage of you, right? I want to make sure that they realize that you know what you're talking about, right? You need to understand it. So basically what's going on, the market is quietly losing energy. And then, of course, the breakdown, as you could see. You could see right there that basically right at the chart shifts into the December area, Bitcoin falls off a cliff, dropping from around 91,000 to 86,000 almost instantly. This is not a normal dip. This is a structural unwinding. So the vertical nature of the drop suggests a liquidation cascade in leverage long positions, automated selling for margin calls, a sharp reduction in liquidity, possibly a macro headline that hit during the low volume hours. And I know these are not easy concepts, but that's what I'm here for, right? I'm here to kind of help you, educate you. Give me some time and you'll kind of understand what's going on and you'll take advantage of it. Bitcoin doesn't immediately bounce back. Instead, it grinds even lower. And we see a dip all the way down to 82,000, making a loss of nearly $10,000 from the breakdown levels. And if you see where we are now, right, you could take a look and you're seeing that this is not exactly what we're looking for here, right? We're having, there's a bit of red, as you could see, with all of the, the cryptocurrencies. Cryptocurrencies are not doing well right now. Take a look. These are live. Live shots as I'm doing it right now, recording it. You could see what is going on, and I think it is a bit of an interesting situation. Now, of course, you don't have just to buy Bitcoins. There's lots of cheaper ways to get into the crypto world. Obviously, the thing is you want to make sure that you have a good way, right, to the proper ways to get in there. But I mean, if you take a look at the crypto, look at this. I mean, you have Bitcoin at $92,000, but you've got Ether at 3,000, Binance 893, Solana 141, Ripple, Polkadot. But the point is, when you look at all these numbers, you could see that, frankly, for the month, they're all kind of red. For the year to date, a bit tough. Year over year, really rough, right? So, that's the idea. What's going on with Bitcoin? So let's keep going, and let's talk about it. So the nature, so basically you understand the chart is going down, right? So in percentage term, we lost about 10%. Okay. So month to month, we are down 8.9% month to month. It's a lot. Now, if we keep going like this, we lose all of it in 1 year. So the behavior. So here's where the psychology becomes fascinating. After reaching the low of 82,000, Bitcoin begins a choppy recovery. First bounce back towards 85,000. Rejection, second bounce, more turbulence, and then a more sustained attempt to climb back to 86,000, which we did. This pattern, jagged, unstable, uneven, is characteristics of markets searching for a new equilibrium after a liquidity event. Think of it like a rubber band snapping back, but wobbling afterward. It's not controlled buying. It's opportunistic buying mixed with forced rebalancing. This type of action tells us that the market has not yet regained confidence. So what is causing this red line with cryptocurrencies, right? Well, one, leverage unwind. If long leverage had built up during the consolidation, then any sudden drop would trigger a waterfall of forced selling. People leverage their position to be able to take advantage of the market. That's for stocks, but it's also for cryptocurrencies as well. A liquidity trap. Right? Holiday periods and late night trading windows reduce liquidity, amplifying the moves. 3, macro trigger. Even unrelated macro event, the Treasury yields, Fed statements, that's coming pretty soon. Regulatory hints can cause knee-jerk reaction in crypto. Number 4, exchange-specific issues. Sometimes a major exchange or market maker experience outages, liquidity withdrawal, or unusual flows. Whatever the exact spark, the chart shows a reaction with immediate, violent, and systemic. It's something deep. So is this a top or just a correction? Well, here's a big question. If this is a local top or simply a healthy correction, let's evaluate. Let's take a look at it. Well, evidence suggesting that this is a temporary correction. One, the market did not fully collapse, right? In fact, we are back to 92. Buyers stepped in around 82,000. The recovery begins quickly, showing interest and participation. It's not a meltdown. That's a good sign. No further breakdown occurs after the first shock. So these are the evidence that it's a temporary correction. But could it be a potential top forming? This is it. You're not going to get above 92. Well, the failure at 92,000 shows overhead resistance. The breakdown was too sharp for a normal correction. The rebound lacks strength, indicated confidence is not restored. Lower highs are forming even in the recovery phase. This points to a market undergoing a cool down. It's undergoing a cool down after an extended run. Is this going to keep on going? We shall see, but this is what we're seeing right now. Number 7, I would say that what you need to watch out for is critical support zone. And of course, when I'm talking about that, right, I am talking the fact that, all of them are also kind of the cryptocurrencies that just follow the lead. Right? Don't forget, there's about $1 trillion of market cap out there on Bitcoin. So this is huge. So the critical zone I think you need to look for is around 82,000 to 84,000. If Bitcoin loses this zone in coming days, the next letdown could accelerate dramatically. That's what you need to watch out for. Careful. Immediate resistance, 86 to 87,000. Bitcoin needs to reclaim and hold these levels to rebuild upward momentum, which I think they have done so far at 92,000 today. Major resistance, it's around 90 to 92,000. This is a region where Bitcoin failed to break through, and this is where we are now today. It will likely serve as a ceiling unless the market receives a strong positive catalyst. So big picture, I think that the chart shows a story of a market that was stable, attempted a breakout, failed, experienced a deep liquidation event, and now trying to find its footing. I mean, I don't think it's a bullish continuation or a confirm bearish reversal, but it's transition. But historically, I will tell you that the Bitcoin has shown after major liquidation events, it often consolidates for days or weeks. Sharp declines can precede equally sharp rebounds, so maybe there's an opportunity there. But prolonged failure to regain the prior range leads to deeper correction, right? Because you're saying, it's kind of the snake that bites its own tail, because you're saying, well, we're at around 92,000 and we were almost 100. And so why can't we reclaim that? Well, because we're not able. Well, I guess if nobody wants to buy, then I shouldn't be buying that. You know what I mean? It's very it's like stock price is very psychological. If you don't feel the interest, then you figure, well, nobody's interested, then why should I hold? And Bitcoin is a funny little thing because, and all the cryptocurrencies as well, is that there's a finite amount of cryptocurrencies. Lots of them, but there's a finite amount. You can't print any more Bitcoin. This is it. You could mine them mathematically, but you can't create them. And that's the beauty of it. Plus, it's it's safer than you think because it's based on blockchain technology. So the human side of the chart, I think, look closely, you can feel the emotional waves in the chart. The optimism near 92,000, the frustration, the shock of a sudden drop, the panic selling. Right? That's a concern. There's a bit of a panic selling happening, and the shock at around 80, the cautious dip buying that follows. The market is a perfect example of a market psychology in motion, and this is very important for you to understand. Is that the stock market, even though it feels very complicated, it feels very, it's all about numbers and calculation. Well, not really. It's about psychology. Now, if you know the psychology, if you understand the psychology, which basically I'm trying to explain to you right now, which basically is saying that we were at 92, 100, we went down to in the 80s, and then we were able to recoup. That's a good sign. But are we gonna break out to the 92? Because if you break to 92, then you're having a good day. And keep in mind, when I'm talking about crypto, right? When I'm talking about Bitcoin, I'm talking about crypto in general, because as you can see, all of them are kind of following, right? All of them are following what is going on in the market. As you can see, 92,000. So I think that's a way to make money as well in crypto. Because remember one thing, the advantage of cryptocurrency is because you cannot make any more of it. And it's very safe in terms of you could track all the moves and everything that's going on with your currency. Now, of course, there's a lot of meme coins and you have to be careful. Solana being one of them. It's a meme coin, but Solana is used heavily by creating, that's how they, believe it or not, that's how Russia was able to do a lot of, capital raising, believe it or not. Through cryptocurrency, but it's not like the financial market itself is any safer, right? Have you ever seen all the currencies that went into Target, for example, not too long ago? We lost all of the, very often you hear, we lost all the data from the customers, for the consumers, all your credit card information, all your social security, okay? So don't be fooled that, crypto is for drug dealers and everybody else should stick to the usual banking system. No, it doesn't work because it's not that safe. So don't forget that Bitcoin is not just a digital asset. It is a live crowd psychology experiment unfolding in real time. That's how I look at it. So the takeaway, this tells us that Bitcoin hit resistance. A large-scale liquidation even triggered a steep decline. The market is trying to stabilize right now. Right now, as we speak, the market is trying to stabilize, but has not yet reclaimed lost confidence. Remember, we got all these people trading this thing day in and day out, day in and day out. All these people's mind at the same time are kind of converging towards the same goal. And that's amazing if you think about it, that all these people are kind of figuring out what is the value. Because you know, you don't own anything technically with Bitcoin, right? A stock, you own a share of something. But Bitcoin, you don't own anything. But yet it has value. So whatever happens next, the setup forming right now is a kind that precedes major shifts. So I think that at the end of the day, what's going to happen is this thing needs to find a foothold very soon. Otherwise, so be careful. And then, of course, you've got the Fed coming up pretty soon. So let's take a look now at what I think is really happening is the decoupling story. And what do I mean by the decoupling? So take a look